Welcome to the Timesaver Calc for Tax walkthrough, Part 2, Calculating Period 1, Printing and Saving. You will calculate a Period 1 payslip when the employee starts work in the first pay period of the tax year, the 6th of April. This is quite a simple calculation, as there is nothing to bring forwards from a previous pay period. You will first want to input the tax and national insurance code and the pay frequency. You can use the calendar dialog box to figure out what pay period you will use for either weekly or monthly. Monthly and weekly both start on the 6th of April. Monthly goes on to commence every 6th of the month, whereas weekly is spanned out in spans of 7 days. Frequencies fortnightly and lunar are multiples of weekly. Fortnightly is 2 weekly pay periods, and lunar is 4 weekly pay periods. You can skip using the calendar if you know what pay period you are in by entering the pay period in the main payslip screen. The software will display the correct starting date for that pay period in the bottom left of the status bar. The tax year will always default to the current tax year, but you can change this if you ever need to check a previous tax year. The tax code will default to the standard tax code used for that year, but if you have been informed to use a different tax code, enter it here. For Scottish tax codes, simply append an S to the front of the code. We will cover different tax codes in a later video. As this is the first pay period, basis has no relevance and should be left blank. We will cover this in the next video, where we calculate pay period 2. Make sure to select the employee's correct NI code. In most cases this is an A, but change this if you have been notified differently. The next 3 fields we will leave blank, as they are for calculating director's national insurance, which we will cover in a later video. Lastly, method is normally left as exact, which means national insurance is calculated using the exact percentage rather than mimicking a calculation done by looking up a table provided by HMRC. As this is the first payslip in the series, if you intend on storing this payslip or including the employee's personal information on a printed payslip, you will need to enter all of the employee's personal information by clicking the Info button. Title, initials, surname are self-explanatory. Employee reference number, the employee's national insurance number, department or cost center if any, pay group if any, and payment date. Payment date is the date the employee receives their paycheck and does not have any effect on the calculation date entered earlier. Once all yellow fields are filled in, you can press OK to continue. So now we will move on to entering the employee's payments and deductions. Under the title, in the payments column, you can select a predefined title or enter your own by clicking Custom at the top of the list. You can also reach this dialog from the Edit, Definitions, Payments menu if you want to go ahead and set up a list of predefined payments right from the start. You will notice as you scroll through the list, the tick boxes for taxable and NIable and pensionable change. For instance, tax credit is not taxable or NIable, unlike most other payments. Likewise, basic pay is the only payment that is pensionable. This becomes relevant if entering a pension scheme in the deductions later. So keep in mind, when entering your own payments, find out if they are taxable, NIable, or pensionable. To enter your own custom payment, just change the title at the side to your own. and click Store. It will be added to the list. Then click Insert and select it from the list. This payment definition will be remembered by the software for further use. You will notice the T and N columns beside the title. This indicates if a payment is taxable or NIable. You can either just enter a value without the pound symbol, or you can use the hours, rates and salary calculator by clicking the arrow in the last column of the payment. For example, if the employee worked 40 hours in the week at a rate of £6.70 an hour, they would earn £268. The multiplier would normally be left as 1, unless you were working out overtime. For example, time and a half would be 1.5. Note the blue highlight indicates an hour rate was used. Or, let's say the employee earns $36,000 a year and worked 5 days in this week. They would earn £692.31 that week, using the standard 260 working days a year or a 40-hour week. Now note the pink highlight indicates a salary calculation was used. You can add other payments for the employee on rows underneath. Say for instance they had done overtime that week, time and a half, 3 hours at £6.70 and a multiplier of 1.5 to give a value of £30.15. Now let's move on to deductions. Like the payments, you can enter a predefined title and value or make your own. Looking through the predefined selection here, you can see it has a taxable, NIable and pensionable tick, just like the payments. These work in a different way though. They instead indicate if a deduction is supposed to be deducted before or after statutory tax and NI is calculated. Leaving an option unticked means it is deducted after statutory deductions are calculated, and if it is ticked, it will be deducted before statutory deductions are calculated. Also, there is a pension scheme option. Ticking this will bring up some extra fields to define how pension is deducted and how much is deducted from the employee and employer's contributions. But we will look at this in a future video. For now, I will select a loan. The employee in this example is paying back a company loan of £10 a week. We can now calculate the payslip using the Calc button. As you can see, PAYE tax and national insurance has now been populated, along with the year-to-date values, at this moment reflecting just this pay period as it is the first one. At this point you will be able to view the underlying values used in the calculation by clicking View Payslip Values for the this period values, or P11 values for a more advanced breakdown of the calculation. You can use the Copy button to copy the values to the clipboard. Now what's left to do is store the payslip and then print the payslip for the employee. To store the payslip, go to the File menu and select Store. The software will pop up a message telling you the payslip has been stored and what payslip number it has been allocated. This will be used later when recalling the payslip for the following pay period. We can now print the payslip by clicking the Print button under the File menu. Make sure to check the print orientation is set to landscape by pressing the Print Setup button before hitting the Print button. Well, that's plenty for this walkthrough. We will look at what to do when calculating pay period 2 in the next video.